Hello YouTube, we need to talk because I am sending out an alert that right now going into Friday is going to be professional time, which means that there is 100% a trap being set. Who is going to win? I'm not entirely sure. I'm saying this because we are resting here at a key level on SPY. We have our uptrend or the green team who is meeting the red team right at a key pivotal point. What's really notable about today is that we have a few competing signals. So again, in a bull market, we generally close higher than we open. 1, 2, 3, 4, 5 out of the last 6 days. Today we opened at 39447, 39461 is our close, which means we managed to eke out a higher close than we did yesterday. Sorry, than the open, and we've done that for 5 out of the last 6 candles. There was definitely a repricing happening yesterday. Happened fast, happened dirty, got us right back down to 395. And now the question is, where are we going to go from here? The reason why I say the trap is set is because when we look here at SPY, what do we have? Well, we got a lower high and a lower low with a doji and a slightly, again, a close that's a little bit higher than before. So now we're going to look at 2 more charts to try to just illustrate what is happening here. We're going to look at, so again, one more time. SPY one-day candle is now technically bearish. We got a lower low and a lower high. Let's look at QQQ. Oh, higher low, lower high, inside bar. Yes, sir. 292.79 is yesterday's low. 293.06 is today's low, bouncing right off that roughly 0.1 area. And it ripped up about 1% off of that low. Now we're going to look at DIA. So now looking at the Dow, what do we note here? Well, this looks a little funky. We got a lower low, lower high, and we actually are closing lower than we opened by about 30 cents. So what does this tell you? It tells you that different stocks, as they are grouped together, are currently either underperforming or outperforming. That is a little bit more obvious as we look here to the heat map. And the heat map tells us that for today, there's some clear winners. We got Tesla, we got energy, consumer services, some tech, J&J. We look at the last 1 week. Is it the same theme? For the most part, yeah, Tesla is getting pretty bright green, so is energy. Looking at the last 1 month, which is roughly from the last time we had our expiry. What have people been buying and selling? Oh, they've been selling almost everything. Tesla is flat, energy is up, Walmart is up, and everything is red. This is notable because at the top of the show, I mentioned that there is also a trap being set. So now I'm going to talk about what that means, because I think what a lot of people might misunderstand from watching these videos is that what we're trying to do is get a best guess on where we're going to go the next day. I thought today's low was going to hold. I thought we were going to have a bullish day. I talked about it on our pre-market stream. I even managed to make some money today. What I did not do was call it perfectly, but that is never our goal. Our goal is to make profit, not to be perfect. And currently in this market, still recording perfect, we are currently fish swimming upstream if we're trying to be bulls. Right now, the dominant trend and the dominant fundamentals are bearish, which means that as we go from the lower pond to the upper pond, it gets risky. There are new fruits at the higher ponds, but it does not come without risk. So if you like where you are right now, meaning your cash, just hold on to it. Don't do anything. If you're going to swim upstream, just realize that this is chop your water up here. This is currently the chop shop where everyone's getting hurt. What we can look at technically is just that we have the lower low, the lower high, and I think there's an options reason for that as well. I'm going to review that in a few more moments, just after we look at a few more things. So keeping in mind, we have that weekly lower low for SPY, but QQQ held and DIA lost it. Now let's look at a weekly chart, because this is more important. It is so important to find out what the strength of these bulls and bears are, because as we go into monthly expiry and quarterly expiry, actually triple witching, I believe it is, not quad witching this time, this is really positioning which is going to matter. We had an event that happened when the ES rollover happened. There is expiry today, and then there's an expiry on Friday. S&P currently has a higher high and a higher low. Our low was at 391. Last week's low was at 388. We held the 390 area as well. Let's pop over to QQQ, or to Qs. We can note that we broke our green line. If we close below 303, we're going to lose that uptrend, which means it's hard to tell, because then we also look at the candle, higher high, higher low. Confusing. Yep, 2 weeks ago our low was 292.95. Our low so far, 292.79. That looks like it's roughly a really small inverse head and shoulders. If you looked at a shorter term candle, you would also see that. on the Dow. Low, lower, lowest, bearish engulfing. Oh no, that is not nice. That is not pretty. That is not bullish. No, it's not. Let's look at a different chart to try to understand how we printed that lower low. Because if right now we have a higher high and a higher low on the two charts that matter, what I want to look at here is going to be ES. I'm going to look at NQ. Then I'm going to look at SPY. And I'm going to look at QQ. And the reason why is because when we form our low of the day, we note there's some candles right here. We got this hammer, which is green, and this hammer right here, which is green. And then we can confirm with the volume. However, what is the key characteristic here? We go down, go back up. The number comes out, which is what? Oh my God, PPI. It came in line for PPI, but core PPI came in at 0.4. That is higher. That is going up. And this was the every previous number also revised higher. So what does that tell you? Well, it tells you that this is not good. It tells you that if you think that the bears are drilling us down based on inflation, they should have gone for it today. They should have printed a weekly lower low, not just a daily lower low. Why? That's a really important catalyst. Tomorrow we got the Team East meeting, right? Team East. We'll see what they do. Team West is going to be meeting later. That is the next one. It's also red and underlined, which means there is high potential for volatility in the most volatile month of the year. That is correct. There was headlines that also came out intraday. What I want to look at now is going to be, did we actually do a textbook bullish pattern on a short time frame? Because before we get a daily or weekly bullish candle, we're going to note we're going to get a we're going to get a test here for the bulls and bears. And the test here is whatever bearishness that was generated on the previous candles, we bullishly engulfed it and closed at the high for the next candle. So that's how we get a lower low, but we bounce back and are actually roughly where we opened. If we went to a line chart, it would pretty much look like we were going nowhere since we did the last power dump down to 39.30s. And since then, we've kind of not really been doing anything. So look here. We have, it's not much of a higher high, but it's a massive lower low. Turns into a massive hammer. We have a higher high, higher low. Sorry, lower low, which means bullish engulfing. Here we have the same thing. Hugely bullish engulfed. And now, as we look to NQ, which is the NASDAQ futures, what do we see? Well, if the NASDAQ is currently leading and every time we go down, boop, bullish engulfing, boop, bullish engulfing. Interesting. Why? That's how reversals happen. Volume is also really strong on those dip buys. Like here as well, right? Boop, boop, boop. Yeah, that's strong dip buying. Look over here to SPY and QQQ. Same thing, bullish engulfing, but these close on the half hour, not on the hour, which means the candles are going to look a little bit different, but the bullishness is clear. Bullish engulfing, bullish engulfing. Nice. Look at QQQ, or the Qs. Now we got, what? The same thing as SPY. Bullish engulfing, but it blows off, comes back, settles higher, dumps down, engulfs it again, closing at the high this time. A little bit higher in after hours. So yes, it sounds like Justin is confused, and that's because the market is confused. If the market's confused, how should we know what the hell is going on? When we look here, what do we have? Well, we have a dump. So we got a bear flag, dump, and now we're going sideways. Stocks can do three things. They can go up, they can go down, they can go flat. Pretty safe to say that we were going down on the hourly. We're now going sideways, and now we don't know. Can we go sideways for longer? Sure. Can we go lower? That's a path of least resistance. But right now, I'm noticing some accumulation. Can we blame this all on OPEX? Yeah, probably a good chunk of it. And we're going to look at one more piece of evidence now. We're going to close that out. And the dollar's also down a little bit today, which gave a little bit of relief, not very much. It only accounts for about a third of the daily gains that we saw. And for the most part, we treaded water after what? The worst day since 2020. So if there was going to be follow through, that should have happened like all day today. We should not have closed higher than we opened. Should not have happened. So now we're going to look at the options chain for today and then also for Friday. Friday is going to be more important, but just look at the numbers here. So September 14th, the 16s for SPY. What do we know? Oh, goodness. We closed at 394.6, which means basically everything here got annihilated. These still got paid out, but whatever. That doesn't really matter. On the call side, what didn't get paid? Everything above here. So they burned almost all the premium, which means the option sellers or the market makers or the, what do you call that, right? The option dealers or whatever you want to call them. They're currently controlling the tape. As much as a headline seems scary right now, This is acting exactly as we would normally expect going into a normal OPEX. So they managed to burn everything. I was looking for 395 on a closing basis for Max Payne today. And then for Friday, I was looking for 400. And now just ask yourself, if for the majority of the day, people they think these things are going to get paid at 4 o'clock. Let them think that. Take it down to 391, run a test. And that's where we get those lower lows. And then the fact that we're engulfing on the hourly tells me that, yeah, well, if people want to, if their goal is to burn the puts, take it down as low as possible, sell them nice and expensive, and then buy them back for a penny to close. On the flip side, they're also buying these babies, right? Sorry, these ones here. They're buying up the options that can offset the loss, if there is going to be one, from going lower. So now we're squeezing. And now that we note that today's expiry is important, but the trap is Friday, and I do not know who will win this. But I have a suspicion that Max Payne's going to come to fruition on Friday. We're looking at the 16s or the monthly expiry now, which happens to also be the quarterly one. Or triple witching, whatever you want to call it. What do we note here? That is it. Look at all the volume here, 400 to 395. So as we're hovering down here, and oh my goodness, is this gushing? So if people want to buy these 390 puts, sure, hold it around the lows, even print a lower low, run the test. See how much they buy. Are they selling back for cents? Are they going to hold on for dollars? Are they going to hold on overnight? And whether they do or do not just means whether or not the dealers can try to cuck or manipulate the chart to avoid payout. So if people want to buy 200,000 puts, and we got there's nothing happening at 400, so it's 395 down to 390, with 390 really being the number. Sell these babies nice and expensive, and then if they really need to, they can flip back. But on the flip side, someone's building a call spread, 395 to 400. So what that tells me is that ideally, if they want to smoke all the options, where do we want on Friday? 400. I am not saying that as a guarantee. I am saying the motivation to get to 400 from the dealers or the market makers is to get to 400 on Friday. They burn all these puts, starting at 400 all the way down. And that's where the money is currently locked up. And if payday is Friday, and payday was also today with hundreds of thousands of puts, and they cannot do it. All they managed to do is print a daily lower low, only on SPY and DIA. They avoid the NASDAQ, which has all the premium. That's really funky. That's like really, really, really suspicious. Last thing to see whether or not team, whatever you want to call them, market makers is in control. What did SPY close at? 394.6. What did QQQ close at? 296. Yesterday they were perfectly synced up at 3 and 400. Today they're off by $1.40, and the NASDAQ is leading. What is that? That's exactly what I would expect to see. NASDAQ's going to lead or drag the S&P up, because S&P is getting dragged down by Dow, but getting dragged up by QQQ. With that said, I wish you all the best of luck into tomorrow. And tomorrow's going to be Thursday. It's going to be professional time. If you don't want to be that fish swimming upstream, maybe you want to wait for more confirmation. And as always, on Friday, we will have that Friday live stream for you. If not, watch the video that's going to queue up now. I wish you all the best of luck tomorrow, and I look forward to seeing you on the next video. Thanks so much.